Nvidia's demand has skyrocketed, and by the end of this video, you'll grasp how the rise of agentic AI is reshaping the stock market landscape. With Q1 revenue surpassing an impressive $78 billion and forward guidance exceeding expectations, we are witnessing a monumental shift in global tech valuations that every investor needs to pay attention to. So, why is this news making such waves in the market right now? For years, AI was merely a future promise, but today it's a powerhouse for revenue generation. We've evolved from simple chatbots to agentic AI, intelligent systems that can operate independently and tackle complex challenges. This groundbreaking transition places Nvidia at the heart of global computing infrastructure, making their earnings reports more significant than many central bank decisions. Now, let's break down the staggering numbers. Nvidia has reported a record Q1 beat, with revenue landing between $78.4 and $78.9 billion. Even more astonishing is the Q2 guidance, projected to approach $87.3 billion, significantly surpassing market consensus. CEO Jensen Huang pointed out that this demand is fueled by profitable token generation and the swift adoption of agentic systems. This level of growth is unprecedented for a company of Nvidia's scale, solidifying its position as a market bellwether. The reaction on X has been nothing short of electric. Traders are captivated by the parabolic demand curve. Meanwhile, SpaceX is making headlines with its IPO filing, boasting a staggering 93 times revenue multiple. Analysts are observing that despite ongoing losses, the market's hunger for high-growth tech is insatiable. The emphasis is shifting from current profits to the astronomical valuations being placed on the future of space and intelligence. Experts are closely analyzing the SpaceX IPO details, noting staggered insider lockups scheduled after the Q2 and Q3 2026 earnings. This structure indicates a long-term strategy, even as the company operates at a loss. In contrast, Nvidia demonstrates how AI can translate into immediate, substantial cash flow. These two narratives represent the dual faces of today's tech market, the profitable giants of today versus the high-multiple visionaries of tomorrow. The ramifications for global tech indices are immense. Nvidia's stellar performance is a key driver for both the Nasdaq and S&P 500. Observing the price actions, we see robust momentum lifting the entire sector. While our focus is on the US, the effects are felt across Asian markets, where tech valuations are being reassessed in response to this explosive demand. Nvidia's technical trend remains firmly upward, easily breaking through previous resistance levels. Beyond just chips, we are witnessing shifts in global macro trends. India is grappling with a significant energy crisis, facing a shortfall of 400,000 barrels per day in LPG, which is impacting Asian refining margins. At the same time, we observe a dramatic pivot in capital flows. Chinese investment in Europe has surged to a 7-year high, while its share in the US has plummeted to decade lows. These trade tensions are redrawing the landscape of foreign direct investment and creating new pressures on global supply chains. So, what should individual investors consider? First, keep a close eye on valuation multiples. SpaceX's 93x revenue multiple signals the risks of overextension in private markets. Next, monitor the geopolitical climate. Donald Trump recently connected AI concerns to record employment and stock market strength, indicating that political sentiment remains supportive of tech growth, despite fears of job losses. Remember, risk management is crucial. Avoid chasing parabolic movements without a solid exit strategy. Looking to the future, we can envision 3 potential scenarios. In the bull scenario, the rapid adoption of agentic AI accelerates, pushing Nvidia's Q2 revenue toward $90 billion and catapulting the Nasdaq to new all-time highs. In the base scenario, Nvidia meets its $87 billion guidance, but the market begins to factor in SpaceX's lockup risks, leading to consolidation across sectors. In the bear scenario, India's energy crisis and US-China trade tensions slow global hardware production, potentially triggering a 10% correction in overvalued tech stocks. The key turning point will be the upcoming Q2 earnings and any shifts in US trade policy. In summary, Nvidia's demand is indeed parabolic, SpaceX is pushing the limits of valuation, and global capital is shifting towards Europe. Stay vigilant on revenue guidance and geopolitical flows. What are your thoughts on the 93x SpaceX valuation? Share your opinions in the comments, and don't forget to subscribe for more in-depth market analysis from Tokyo Macro.